Ladies and gentlemen, welcome back to PwC's Risk and Regulation news channel, and welcome back to our special video series on securitization. And for the first time, I would like to welcome you to our PwC Milan office. And our host for today is our co-workstream leader on securitizations in the EBA SSM office, is Gabriele from our PwC Milan office. Hi, Gabriele, how are you?
Martin, thank you for being here. It was a pleasure.
Thank you for inviting us. And of course, also the other workstream leader of our securitization workstream of the PwC SSM EBA office is today with me, Christoph. Hi, how are you?
Hi, Martin. Thanks for being here.
We have to thank Gabriele that he invited us.
It's a pleasure.
Ladies and gentlemen, today it's the 4th edition of our securitization special video series. And after giving you a first introduction into the topic of securitization, we were speaking about the proposals from the EU Commission on how to reform the securitization workstream. We were speaking about the CR3 requirements and the SRT requirements. Today we want to go a little bit more into detail into how to get SRT ready. And the first question goes to you, Christoph. When we speak about SRTs, there's one really big advantage of SRTs, and that is the capital relief. But as we learned already in our previous sessions, it comes with a lot of requirements. Could you please give us an overview about the main aspects that should be considered when we are speaking about an SRT?
Yeah, I'm happy to do so. Thank you for this question, Martin. I think there are a lot of requirements to consider. That's definitely the case. And what I want to show you here, it's probably not the exhaustive list of requirements, but like clusters of topics that need to be considered, especially for first-time issuers. And that is something that is really important. Banks are at the moment, given the EU reforms, probably given the capital pressure, thinking about getting SRT-ready, entering the market. And what we see here is, what I would say, a map of minimum requirements that need to be considered. You first definitely should start with a strategy. So why do I need to have an SRT? For what purposes? When do I need it? Do I need it frequently? Do I need it for one time? And so on and so forth. And you start with a SRT strategy, so to speak. You need to implement then this whole thing into your I would say in your policies. This is also a very important requirement. And you obviously start with something like a feasibility study. Am I really SRT ready, or what steps do I need to take to get there? And this is definitely an important part. And of course, another one is, do I have the contact to the market? It's not about just like transferring the risk. You need to find someone buying the risk. And that is definitely something. If you are not in the SRT market at the moment, you need to find the investors. You need to get into touch with them. It's nothing that comes overnight. So you need to be prepared for that as well. Of course, SRT is first and foremost there to relieve capital. So the regulation is a key topic here. And therefore, regulation and supervision should be a cluster, high priority cluster for that. You need to calculate your RWA. You need to be able to report it to the supervisors. And what is very important, you need to perform this so-called SRT assessment. This is something you need to do on your own. It's a self-assessment, more or less, to calculate the SRT and also like give evidence that the qualitative requirements are fulfilled. And then the notification process with the authorities start. So probably with the JSTs, the ECB, when you're a larger bank, and you get into touch with them and need to perform the SRT assessment together with them. This is a very important and crucial part. On the other hand side, leaving Pillar 1 capital requirements, getting into the Pillar 2 world, like for the risk management purposes, you need to identify how to incorporate the SRT impact in our Pillar 2 world, like the ICAP, for example. Do I need to consider the protection somewhere in my limit system, in my concentration risk system, and so on and so forth? You have, of course, many legal requirements to consider. There's a contract. When it comes to a synthetic securitization, you have probably a financial guarantee, or you have credit and load. That's a long list of legal requirements to consider here. You need to have the legal opinions. You need to write the contracts, and so on. So this is definitely important. And what sometimes is a bit underestimated is the compliance part. So when you enter into a securitization with an investor, you also need to do some kind of know your customer process. Am I allowed to get into a transaction with such an investor or not? So is it in policy or out of policy in my bank? So there's also a lot to consider in terms of compliance, AML, KYC. Accounting, very important topic. I mean, we talk about a significant risk transfer. For synthetic securitization, it's normally not the case that you achieve a balance sheet derecognition, but still it must be considered, it must be investigated, and in the end you need to write like an accounting opinion and so on and so forth. If there's an SPV incorporated, you need to think about consolidation and so on. So accounting and obviously tax requirements are very important. Last but certainly not least, it's all about IT infrastructure and all about data requirements. So this is definitely to be able to report to the ECB, to be able to comply with the ESMA standards and so on. You need to have a very robust reporting framework in place. And this is, in many cases, nothing you have already in place when you are a first-time issuer. And therefore, setting up the infrastructure, probably buying or developing reporting software for the securitization reporting is a crucial step. And also to comply with due diligence requirements from the investor. They ask for many data, be it for regulatory reasons or for economic reasons, but still many data points that you need to have available in a high quality, especially when it comes to historical data for your portfolio. And this is an important step. And of course, other aspects not to underestimate, and that's probably also something where we can jump in. You need to have a very robust project management office for a first-time issuer, because you need to play with many stakeholders here, internal and external stakeholders. You need to convince many people that it's a good idea. You need to educate many people internally about the specifics of the securitization. So really important part of the game. And of course, there are many external stakeholders to manage, be it the regulator and the supervisory authorities, or legal counsels, external advisors, auditors, and so on and so forth. So there's also something that you need to consider in your project management, definitely.
Oh, Christoph, there are really a lot of things that have to be considered for performing an SRT transaction. Maybe Gabriele, first question into your direction. You have a lot of experience in that, and depending on what we just heard, it seems like that it's a quite long project. Maybe you could describe us the general approach on how to conduct an SRT transaction.
Yes, Martin. There are, let's say, at least four, let's call it macro phases that you should take into account. The first, of course, the most important is you need to identify the purpose of portfolio. And when you identify the purpose of portfolio, you need to take into account the advantage for the bank, but also, as Chris was saying, you need to sell it in the market. So it should also be appealing for some counterparties. So it should be a balanced portfolio with a nice asset class which can be easily sold to the market, and then you can optimize, try to understand which position to put in, which position you should drop out in order to have the best solution for the originator and for the buyer of the portfolio. So this is the first phase for sure. Once you have the portfolio and you build the business plan of the securitization, then you need to decide the tranching. And again, you should do it, not optimizing for the bank, but also making it appealing for the investor. For instance, you might want the senior tranche investment grade. The banks might want the junior tranche to be more elastic. So you need to balance a lot of different potential requirements, again, from the originator and from the buy side. So you do the tranching, you propose this as a business plan of the transaction and a proposal of tranching. Then you need to obtain the risk transfer, okay? Which means technically you need to create the SPV, transfer the position, issue the tranches, etc. But more substantially, you need to show, and we will get back to this, to the supervisor that in fact the transfer has been, the risk has been transferred. As as you have discussed in the previous episodes, there are some new rules which are coming out in order to make more substantial this process, okay? Last but not least, you need to sell this risk, which is important because first you need to have the buyer. Second, you need to have the buyer at the right price, because of course if the transaction will not be convenient and the saving in terms of capital will be not enough to offset the cost of buying the protection, it can be not convenient. Otherwise it will be, and then you proceed with the transaction. So the market distribution, one last point, usually the first time is very important to do it in a very structured way, because you need to find the right, let's call it partner. Because once you do one, then you establish a relationship with the buyer, and then it's quite easier to do the other ones. Okay?
Absolutely. Thanks a lot, Gabriele. As I mentioned before, you have a lot of experience in performing SRT securitization transactions. If somebody approaches you now and asks you what are the most crucial points, what are the critical success factors of a securitization transaction, what would you tell him? What are the four most important points?
I would say 4 points which covers the main phases of the process. So the first is you need to have a well-done structuring process, because the structure should be robust, resilient in time, because you need to show that the transfer is the risk is transferred along all the life of the securitization, but should also be optimized. So structuring where the transaction is by far the main point when you start one process like this. And again, the first time is quite important, because then maybe you can do something which is in time very similar, but the first time is quite important. The second, you need to have the investors on your side, and the price that you will obtain will crucially depends on which investors you select and how you run the process. Competitive bid, bilateral. There is no one single answer which is better, because sometimes you might have a, say, ideal partner and you might want a bilateral transaction. Sometimes you might want a competitive bid, at least the first time. Then probably when you go on, you usually tend to go constantly with the same partners. SRT is the core of all the process, so you need to show that you transfer the risk, otherwise it will be useless. So this is, I would say, this is the central part. So show that you really and substantially transfer the risk, show that this will hold along all the life of the transaction, show that you can also stress the business plan, and anyhow you will not, you will still be safe, and so the risk can be considered transferred, and so on and so forth. So this is the core of the transaction. And then the dialogue with the supervisor. As we've seen in all the strategic topics for banks, you need to agree with the supervisor and show and demonstrate that the risk has been transferred. Therefore, there is this dialogue where the supervisor can intervene and ask you either more information or challenge the structure, because maybe they can say, no, I don't like this, I want to be more robust on some side, and so on and so forth. So this is also a key important topic. So to summarize, structuring and SRT, key topic you must do, coordination with investors and with supervisors, that means outside the stakeholder that you should take into account.
Wow, thanks a lot, Gabriele. So SRTs have definitely a huge advantage. That is the capital relief, of course, but it comes with a cost, and the cost is complexity, of course, and you have to consider a lot of things for not failing, because that would be the worst case. And based on what we have seen so far, I think it's very important to have a really, really good project management and a good project plan. Maybe, Gabriele, could you give us an overview how an ideal project plan should look like? Of course, every project is different, but based on your experience, what should be considered in a project plan?
Yes, Martin. I would go on two axes. So if you see in time, you have basically the different phases, and the process is usually, let's say, between 6 and 9 months, but better consider 9 months at least the first time you set up a process like this. If it's not very simple, 9 months is okay. And you need, of course, to do the business case in which you do the structuring, all these activities. Then you have the core part of the project. So when you start to build the transaction and dialogue with the counterparties, and then you go to the operational phase. So once you set the notes, you need to start with the reporting, etc. So this is on the timing axis. If you see on the contents what you should do, you should really cover all the aspects. You should have a good PMO, a good strategic approach to the transaction. But then going down, you should have somebody dedicated to IT, somebody dedicated to follow the SRT process, and then going down the external stakeholder. The stakeholder, both of the transactions, so like investors, both in support of the transaction, like the legal advisor, which you need to in order to support you in the issuance of the notes and in showing that there are no clauses that might bring back the risk inside the bank. So there are really a lot of activities that you should take into account, and so the process should be really coordinated from a project management point of view.
Great. Thank you very much. Yeah, we heard already.
Matti, if I can, and there are some key choices that you should do. So, for instance, we say securitization, but then there are different options. It can be synthetic, it can be traditional.
Of course.
You can do mezzanine and junior, or just junior, apart from the senior, which always exists.
Yeah.
You can choose, it can be on performing portfolio and non-performing. So you can have different choices also to take.
Yeah, perfect. Thank you so much, Gabriele. Yeah, we heard already a lot of things that have to be considered in a securitization transaction if an SRT wants to be achieved. Maybe as a summary, Christoph, what are the key aspects, the key advantages, and what are the key challenges for an SRT that definitely should be considered to ensure that it's a successful project?
Yeah, I mean, we heard a lot about the opportunities and advantages of SRT transaction, capital relief first and foremost, but also like what to do with the capital relief. Sometimes I really need capital relief because of my capital ratio is under pressure. But in normal, I would say in all other cases, it's more about freeing up some capital for new businesses. It's for active RWA management, like a very suitable tool, I would say, especially when it comes to, looking into the future. There is uncertainty in terms of geographical risks. We have Basel III finalization. We have CR3 here in Europe. So RWA are expected to increase, and somehow we need to manage it. And we saw it's nothing. The securitization is not a tool that you can, implement overnight, and then it's there for RWA management. But you need to prepare for about over a long period of time, I would say, and then you are ready for going into the market. But this is the opportunity side. The challenges, we mentioned a couple of them. It's definitely the complexity, but complexity is always relative, right? And I believe we can manage complexity if you choose like a stable, as you said, Gabriele, a stable and a very robust first issuance, and then you can probably for the next issuance and the next you can add more features into it and so on. Start simple, build a robust infrastructure internally and a relationship to investors and supervisors, and then you can start growing a bit into this business. Of course, it's technically a bit complex and probably also expensive to build up the infrastructure. So it's always a trade-off of, I would say, the one-time issuance is not a good idea in general. Sometimes you need it, but in general, it's not a good idea because there's a payoff over time for all the investments that you need to take. You have, of course, extensive transparency requirements, both to the regulators and to the investors. This is also something that you need to be aware of. If there's an investor, and it's probably not a blind pool, very diversified portfolio, but more concentrated portfolio, you need to, disclose everything about the portfolio. This is something you need to be aware of, and your organization must be ready to provide all the information in a very high qualitative way.
Yeah.
And of course, you highly depend on the portfolio composition and the quality of the portfolio. I mean, as an originator, you want to transfer higher risks to have a more effective transaction. As the investor, you want to buy low risk, and that's something to manage the expectations. And of course, not to forget, when you are relying on an SRT in terms of capital relief, you need to think about what to do in 4 years' time, probably when the transaction is over. Am I ready to have a follow-up transaction? Is my portfolio there have a new transaction then? Because then the relief is over and you need to find a new way to generate capital. So the follow-up financing question is a challenge. So based on these opportunities and challenges, we identified, I think, some critical success factors from our experience, and just a short overview of that. We would also always say it's very important to have a very agile and efficient, targeted project management for a pilot transaction. So you need to train your people, you need to educate, and sometimes you need to convince probably the IT organization that it's important.
So to forward, of course.
Exactly. And what you always need is a strong commitment from all stakeholders. Otherwise, you won't succeed. And this is something that we saw in practice several times. Of course, it might only make sense if you standardize the whole process as much as possible. So that will save some costs, and the cost-benefit calculation will be way better when you standardize and scale the processes you implement. And of course, you need to look at the portfolio. Do I have a sufficient size and attractiveness of the portfolio? Is there an investor willing to buy it at a price that I like? So this is definitely the business side of the question. And again, it's not only a question of today, but also thinking about follow-up transactions, because once you are in the market, you need to have follow-up transactions. Otherwise, no one will believe that you are really established in the market. And therefore, I would say the portfolio question is very crucial.
Can I add one point on this last one? And this is especially important for small and medium banks, because then you can attract more investors. If you give the idea that it's not a one-off, but you want to start this process, because then you say, okay, maybe it's not a big portfolio, but it's something that will last in time.
Yeah, thank you very much, Christoph. Thank you very much, Gabriele. That was really insightful. And of course, there are a lot of complex requirements and there are a lot of challenges, but considering the current market, we have the challenges on the RWA side coming from the CRR3, like the increase in RWA, but also when we look to the macroeconomic outlook in all the Eurozone and EU countries, securitization and especially SRT will become a very, very important instrument for capital management and NPL management. So I'm very happy that I have you two guys on board. You're really absolutely experts in this topic. And that assures me that we as PwC, that we are definitely the number one in supporting our clients in securitization transaction, especially with a focus on SRTs. And that brings me already to the end of this presentation, giving you, of course, again, also the overview on how we as PwC can support you. Actually, we can support you from the cradle to the grave. So from the pilot phase of a securitization transaction until, if you want to repeat your securitization transactions, we can support you in any phase. And of course, we can support both sides, on the sell side, but also on the buy side. So everything out of one hand, and that of course gives you as our clients a huge advantage. So Gabriele, thank you very much. Thank you for inviting us here to Milan. Christoph, also thank you very much for joining me here in Milan. It was a pleasure. So let's head back to Frankfurt. And you, ladies and gentlemen, do not miss our next episode. Bye bye. Cheers.